morning and welcome to today's 5 with Fitz. It has been an incredible week by any standard, and the indices are once again flirting with record new highs. Let's finish the week strong. Here's my playbook. Number 1, I'll bet you dimes to dollars that WeWork wish they did work with Trump Media and Technology Group. The former made its NYSE debut via a SPAC with a valuation of just $8 billion, a fraction of the $47 billion touted under the hotboxing executive Adam Neumann, who reportedly had a passion for stashing weed and cereal boxes on private jets. The latter, on the other hand, blew every conceivable record with a quadruple out of the gate and another 100% boost on top of that. I wouldn't touch either though, and to be crystal clear, for reasons that have nothing to do with politics whatsoever. WeWork is an unmitigated disaster by all metrics, unless of course you are an early investor who came in to clean up the earliest investors. Digital World acquisition has simply run too high too fast, which means the odds of a reversal are super high, as is the risk. Not to mention that they don't actually have a product yet. 2, Powell makes Fed officials probably wish they'd been elected to Congress. The Fed has finally decided to do something about insider trading following a public outrage over recent disclosures. Not that 2 high-profile regional bank resignations had anything to do with it. Now let's see if Congress has the guts to do the same thing, especially when it comes to all those spouses who are making supposedly independent investment decisions before, on, or just around key votes. Coincidence? I don't think so. 3, meanwhile, over at Intel. Shares of Intel are down 10% pre-market after that company predicted lower profit margins because of ongoing new technology investments. It beat on earnings, but sales fell short of expectations. Might be worth a nibble because Intel and AMD are the only game in town if China heats up and the chip shortage can't get fixed. Or 2. 4, Snap. Yeah, about that. Shares fell 22% after a big ugly miss on revenue thanks to Apple's privacy changes, which threw the company's advertising model into chaos. Normally you'd hear from the dedicated buy on dippers, but in this case it's been eerily silent overnight. Enough said. 5, if you think Bitcoin's run is over, you better think again. According to the Wall Street Journal, the Houston Firefighters Relief and Retirement Fund, which has $5.5 billion in assets under management in more than 6,600 benefactors, has purchased $25 million worth of Bitcoin and Ethereum through NYDIG, a subsidiary of Stone Ridge, an alternative asset manager. This is a big deal because defined benefit plans like this one do not untie their shoes unless they're confident whatever decision they've made passes the prudent person test. That's an institutional standard intended to prevent stupid decisions, but is really a CYA if something goes wrong. Anyway, the reason this is important is because the prudent person rule standard stipulates that whatever decision is being made is the same as a prudent person might make for their own investment portfolio, hence the name. So at the end of all this, if you think Bitcoin's run is over, think again, because a few more decisions like this one in accordance with the prudent person decision will bring billions of pension assets running into crypto, but primarily Bitcoin and Ether. Today's bottom line, people who really want to make money in the markets will find a way to do it. Everybody else is just going to find excuses. Just saying. Anyway, you got this, I promise. Have a great weekend, and I'll see you Monday. Thank you for watching today's Morning 5 with Fitz. Click subscribe to get daily market notes right here on YouTube, or sign up for the email versions at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and more.